Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
good evening and welcome to Wealth Within Live, the Australian stock market show where you get to ask the questions and we give you the answers about all things investing and trading. Now, we've all been locked up for over a month, and so it's great that restrictions are now easing right across Australia, and it'll be nice to be able to socialise once again. Now, we hope you've had a good week and are ready for what I know will be another fantastic stock market show tonight. Again, it has been another very interesting week on our stock market, not only just in Australia but around the world. Now, tonight, as always, we will shed some light on the current market as we aim to inform and educate you on the realities of investing and trading. Tonight's topic is hard hitting and may cause you to rethink your current strategy on the market.
Now, our topic for tonight is on day trading and predicting short-term market direction. Is this a good strategy or not? As always, we'll look at what is currently happening on the Australian stock market, give you our thoughts, answer your most burning questions, look at the stocks that you're interested in, give you our expert opinion, and a whole lot more. Hello, I'm Janine Cox, Senior Analyst at Wealth Within, and joining me tonight is Dale Gillham, our Chief Analyst, and we're Australia's most trusted stock market educators. I just put that little bit of ad-lib in there.
which bit was the ad-lib? I think most of it was ad-lib, wasn't it?
How are you going?
I'm good. I'm really, really good.
You had a nice weekend?
Yes, I did actually. It is.
You did?
Yeah, I did.
You weren't working. That'd be a change for you.
No, I was actually working in the studio here, sort of pottering around, with these hands are made for talking, not working.
Right.
But I did have a drill in my hand and things like that. I do like to get my hands dirty occasionally.
Yes.
And pretend I'm Bob the Builder. Okay. Although my brother, who is somebody who builds a lot, he calls me Jerry.
Oh, Jerry builds.
Yeah. He lets me take anything apart, but he won't let me put it back together again. He said, taking it apart, I don't care if you wreck it because I can fix that. But if you put it together, then it's going to take me a lot longer. But
Look, I'd have to say that your skin is looking really good at the moment. I know you've been on a diet. How's it going?
Yes, I'm on a no food diet at all, I think.
How's the celery juice in the mornings going?
Oh, geez, a bit tight. My wife has got me, my wife has got me on a vegan diet. So, but I do throw a few little things in, like vegan chicken every now and again.
That was an old joke. You told us that one.
I know, but I'll come up with other
You told me today that you stopped drinking the celery juice.
I did.
Just said, your wife said to you, look, if it doesn't taste, it tastes good after a while. And you said, well, how long's that? Because it still doesn't taste good.
I think I'll be dead before it tastes good to me. But yeah. But anyway.
Well, I'm reading the book now, so.
You're reading the book. So I'll have two of you on my case to eat vegan. That'd be nice, isn't it?
So if you have a burning question for us, on the right of your screen is a chat box. So put your questions there. And as always, keep your comments tonight constructive so that we can assist as many people as possible with genuine questions.
Now, if tonight's your first time, then may I say a big hi and very much welcome you to our show. We're excited to have you with us and hope you enjoy the show. Now, moving on, it is the second Tuesday of the month, and that means we take a look at the sectors and indices in the Australian All Ordinaries Index. So let's get into that discussion right now.
Okay, on the screen there you can see the board here. We've got the healthcare sector. Now I'm just going to get rid of this one here so I can see the whole screen there. You can see the healthcare sector up 2.2% for the week. We've also got the S&P 200 Industrials Index 1.4% up, the information tech sector 0.94, communication services 0.88. Now, interesting, consumer discretionary is in the middle of the board at the moment, but still up at 0.55, which is good. and consumer staples, they're sort of going neck and neck at the moment, but it is only the week, so it's just interesting to see, and it's early in the week. Now, utilities just in the positive there, and then we've got 3 sectors in the red, which is all very interesting. So energy again in the red, materials and financials, of course, in the red with the banks down. Looking at, let's have a look over the month and see what the difference is there. And you see a bit of a shift happening there. So we've got a lot more sectors in the red if we're looking over a monthly perspective. But information technology is a standout, still up 8%, utilities up 1.5%, but comes nowhere near that info tech area. Healthcare sector's almost line ball for the month. A lot of people were hanging on to the healthcare stocks, thinking that that they will be resilient, which they have been. Consumer discretionary, consumer staples are still negative. Looking at the energy, materials and financials all down. Now, what I thought I'd do is quickly show you what's happening for the year. So that adds a whole different perspective on what's going on here on our market. So energy down 38%, financials 30% still, even with some of the moves up in some of those stocks. Industrials minus 21, consumer discretionary minus 19. Now look up here and we can see consumer staples minus 3.6. It's relatively resilient there, and healthcare up 6.5. So far that's the leader for the year. So it's interesting to see, and I thought we'd quickly just switch to one of the sector charts and have a look at, I'll see if I can find one for you. I think I've gone the wrong way. No, you've hidden them on me.
What did I do?
He's hidden the sector chart, so I can't do that today, but perhaps I'll do that next time.
They're just a different colour.
Okay, fantastic. Okay, so looking at this interesting graph that I have on the screen here, I'm going to show you this instead. It's something we don't normally talk about much on the show, but what it actually is...
They paid their union fees yet for that?
No.
Oh, sorry.
What this is it's actually comparing the sectors, if you could get your magnifying glass out to see it, comparing what's happening with the sectors and the S&P ASX 200. So here you can see that we've got this area which is a lagging area. So we've got energy, which is this blue line coming down, financials, and we've got utilities coming up into the improving. So we're looking for the sectors that are actually coming up into the improving here at the moment. Financials did come up. It's come back a bit. I think it may push back up into improving again, but utilities has moved up there nicely. So all of these other sectors are just dancing around that ASX 200 at the moment. So, but it's an interesting perspective, that graph.
Yeah, it does. It shows us what momentum or what sectors have got momentum in the marketplace. So, because obviously we talk about money shifts. It's like sand in a sand pit, it shifts from one corner to the other depending on what's going on. And we find, and that's what sector investing is all about, isn't it? They say, well, one sector's going up, one's going to be going down, and the rest are going to be going sideways. Yep. So, and that's really what the premise is of sector investing. We just say buy what's going up, which just simplifies it even more. But that just shows you all the charts that we looked at, just show you what the momentum is of all the different sectors, who's going faster and who's going slower, where the opportunities rise.
Yeah, and you can see the healthcare sector leading off there to the right at the moment, but it doesn't mean it will remain that way though. Yeah,
I mean, obviously we have a survey on our website, a 60-second survey that people take, and they all say, oh, I know how to buy, but I don't know how to sell. But I would also add, they don't know how to buy, but more importantly, they don't even know what stocks to pick. Trying to find a watch list is one of the most difficult things people find, because they don't understand how to pull a watch list of stocks together to make their life simple. But when we're teaching people, that's the best thing that we teach them, to really simplify their investing and trading, is how just to really simplify things down and focus on what's the good stuff.
So what you're saying is you can drill down from the sectors and come down to the individual stocks and do it that way. But what you're saying is a lot of people, they can see all of these stocks on the market, they've got no idea about where to start, but sector, this is why we show the sectors every month, so that people get a good idea about what's happening.
I mean, to me it's like, busting open a feather pillow and throwing it in the air, and each feather is a different stock. People are trying to catch whatever's flying around, and that's how a lot of people attack the market, whereas we're very much laser focused in terms of not only what we do but also what we teach our students is less is more. So looking at less, understanding more about those less will help you be a better trader,
and there's not one way to do it. No. So it doesn't mean you have to look at the sectors to pick stocks. It may be that you choose stocks within the top 20 or top 50, and that's where your focus is. Mid-cap 50, it depends on the design for your portfolio, and we've talked about that over recent months, how people need to start from the top down rather than thinking bottom up, which is typically what happens. They think stock first rather than portfolio first.
Yeah, and it's got to be the other way. It's it's that opposite principle. And it's also when we're looking at the money flow, it's what indices are travelling and then what sectors are travelling. And we find it's the case all the time that things move. And like we talked about, remember the spreadsheet we brought up a few weeks ago, I think it was a few weeks ago, when we were talking about different stocks and what's going on in the different stocks, and we were showing people bear markets and how long a stock or how long the markets or stocks have a bearish run. So it's like 2 years is the maximum of a bearish run on a stock, or 1 year on another stock, or 3 years on another stock. It's the same sort of thing. It's like if the market's down this year, it's like I was chatting with Jim Beach back in December, I think, and I said the US market's not going to have a market like it had the year before. Because it's never had this many years in a row where it's been bullish. It's got to have a bearish market. Whilst I didn't expect what happened, it was still statistical probability. But anyway, let's keep moving on, because I think we've got.
Anyway, it's time to get into our. Oh, that's thank you.
Okay,
You're a gentleman tonight. Oh, gee,
I was a gentleman last week. That's what you said anyway.
Okay, now it's time to get into your emails, and yet again, we've got far more than what we can handle, and also have a lot of questions. So if he keeps talking like this tonight, we may not get through them all. So therefore, we're going to try to be very selective and answer the stock questions where you give us more detail on the stock and tell us why you want us to discuss it. So include this information, and this increases your chances. So I've seen some of you put, I've read your book or I've ordered the book. Good thinking. Our first question is from Cody. G'day guys, love the show. Have read your books, Dale, and I'm putting into practice what you're teaching me. Your thoughts on Downer EDI, ? Was trending nicely from mid-2019 prior to current pullback. Maybe I'm wrong, but I see some historic resistance at $8. It's a stock I've got on my watch list, and it's coming close to triggering a buy signal for me. So look, that's interesting that he's saying it's a buy. Also, I'm wondering how much attention you guys pay to strong positive trends on stocks prior to the pullback. What's he got there? I like we've seen recently. Thanks for the great show. Regards, Cody. So Cody, this is a really interesting stock that you've picked, because it's actually one that's so high in volatility.
Yes,
so
it is.
For short-term trading, it can be great, but look, you can really get stung by this particular stock in the medium term. I'm going to just show you the big picture. So you'll see what I mean by that with Downer EDI. So obviously at the start of the monthly chart there, and we always start, for people who are new, we start in the big picture time frame, always looking at the monthly chart, because that basically gives you a bird's eye view of where a stock's trading. And we're going to talk a little bit about that tonight when we get into the subject. But looking at the highs here, you can see this stock had terrific runs up to the highs, but the lows were just absolute tragic in terms of the velocity of the declines on this stock. So you've got to understand the nature of the beast is what I'm saying. So people who are holding this stock thinking, oh, they've held it all this way up and it's what a reprieve, you know, to actually have seen a comeback in Downer EDI. Maybe some people were holding it back here in December 09. Finally, it came back to the same price and then only to plummet again and take out all the prior lows. I mean,
well, you could have bought this 18 years ago and still be sitting at the same price. And that's, again, you know, and I don't know how often I see somebody ask me about a stock and saying, should I buy this? And when they're looking at a chart, they're sending a chart of the last year.
Yeah.
And you're going, well, that's not enough. You know, that's not really enough. It doesn't show you the picture. And then when you start talking to them about it and show them this sort of chart where it goes back, you know, 20 plus years, and you go, well, 20 years ago you could have bought it at the same price. Now, hey, why would you buy and hold that? Because a lot of people use buy and hold. Well, I'm holding it for 3 years, 5 years, so it's going to cover all mistakes for me buying right now. Well, it's not necessarily the case.
It depends on your timing, because
it depends
you
on
know,
your
if you
timing.
get it at the low, then yeah, you may be, but how do you get out then if you've got no rules? What do you do?
Well, if you bought it in 2016, you would have been excited for a while until recently.
Yeah, you would have been back to where you started. Yeah, look, I mean, I'm looking at the stock now on the weekly chart, and I can see there, like with most stocks, there's been no unfolding on the downside as they've declined. And we can see that there's been a bit of a rise off this low here. So it made its low on the 27th of March, or week ending the 27th of March during that week, and then started to track back up. So look, I would say that there's a potential entry there short term. But look, at the moment, it's really struggling to get past that $4.10 mark. It's just trading there. So look, I would say with the US market down overnight that we've seen quite a few stocks come back being neutral or slightly positive today. It was a really mixed market. And then looking at this one, it's no different. So, but there's a potential for this stock to rise above $5 in the short term.
Yep.
Looking at the risk, of course, you've always got to consider the downside. I would say, in thinking about what Cody's saying, you're not wrong. There is an entry there physically. It just depends on what your risk is, how you're going to manage it, and you've got to know that before you get into the trade, how you want to do it. So,
and if your intention's long term,
not right at the moment, because that could go down again potentially.
Yeah. Our next question is from Josh. Hi Josh, how you doing, buddy? Thanks for sending in a question. He says, hi Dale and Janine, hope you're both well. Yes, we are. I'm super fantastic. I'm not sure about you, Janine.
Didn't you just sneeze before? I thought I heard you do that.
No, itchy nose.
Yeah, I was getting a bit worried. I thought I might have to put a mask on you.
Oh, geez, you and your mask. Josh says, I recently bought and read Accelerate Your Wealth. Thanks, mate. I thoroughly enjoyed it and I'm currently reading it a second time. I'm completely new to the stock market, but I'm enjoying the learning process and trying to apply my newfound knowledge. The stock I'd like to ask about is James Hardie Industries. I'm looking to potentially buy based on a weekly chart trendline trigger. Now, he's actually supplied me a chart. Fantastic. I think that was a really good thing.
I'm excited that he's read your book and he's actually putting it into practice, or aiming to put it into practice anyway.
Yeah, absolutely. And so we're going to bring up his chart in a second, but if the stock finishes up again this week, from what I can see, it's been rejected around $22 to $23 in the past. So I'm hoping to see it pass through this before I buy, helping me to potentially trade on confirmation, not speculation. Trade the trends. He's really picked it up well, hasn't he, from the book? He goes on to say, hopefully my first attempt at an analysis isn't too far off. Would love your thoughts. Cheers, Josh. So our team are going to bring up the chart, so you can have a look at that. So you can bring it up. Have you got it up on the screen yet?
Yeah, I've got one up there. That's James Hardie sitting there.
Yep, so you got that.
Yep.
So this is actually the chart, Janine, that he actually showed me. So I've actually printed it all up. But he's done a great job, I think. And I think what he's done is he's actually taken what's in the book and the essence of what's in the book and put it there. So I don't have a problem with what he's done at the moment based on what he's read.
Well, based on what he's read, but there is actually no... he doesn't have three peaks, and that's what the issue is that we've got to look at. So he's tried to put it on there, but this is what you're saying you don't have a problem with is his attempt is fine.
Correct.
He's tried to do it in the right way and using the book as a reference. However, the book is not, the book is to inform you and open your mind to what you can do. It's not actually a teaching tool per se. And the challenge is for a lot of people when they're trying to apply trend lines, it took me a long time to learn, and I had to initially, when Dale and I were first working together, he'd say, oh look, if it looks like a dog and it smells like a dog, then it probably is a dog. And I said, well, they're not rules. You can't teach people based on that rule. We need some, and being an engineering background, I wanted to pin him down and say, well, look, what are the rules going to be then? And so that's what we went through. So now we're looking at what a lot of people do, and some people think that you can have two highs on a decline and it makes a trend line.
But that's what most people do, though.
There's not even a trend there confirmed.
Oh, look, over the last 20 odd years, 25 years or something, I've been teaching traders that the amount of people that says I know how to draw a trend line astounds me. But every time I ask, and bar none, I've said, how do you draw a trend line? And none of them have got rules.
Yeah.
It's always like, just draw a line across the tops of the bars. That's not a trend line.
Well, you're right in that he's had a really good go at applying it, right? And the fact that he sent it in is great, and I think that's really cute that he's done that, because we might actually decide to then give him a few more clues.
Cute, is it, mate? It's not cute.
But I would go. The book actually gives him a bit more detail, doesn't it?
Yeah, it does. And the thing is, it's about understanding what they are and what we constitute as a trend and a trend line. But just drawing a line across the tops of things is not a trend. I mean,
look, you, your wife, and the team have gone to the nth degree to express the rules in the current form of the diploma, such that they're there, and the idea is when you're applying the trend lines to have those rules beside you, and when you're doing it, because when you're learning, you think stocks unfold in different ways. And I can remember looking at charts and thinking, okay, is that a trend line there? Yeah, and then finding the rules and, okay, 1 rule's met, 2 rule, 3 rule, etc.
Yeah,
but you need to go through that process.
As an engineer, if you were going to draw a straight line on something, what do you need?
Well, to me, it was a natural thing to do because I'd always drawn, line of best fit and things like that. So to me, it was a natural thing to see when you're drawing a trend line that you do it in a similar way.
Yeah, but you've got to have rules around it, not just drawing it.
That's
so
right.
Right now, I don't agree with your trend line, and as Janine said, that's the first thing she said. I love the attempt. I really do. I think it was amazing you'd put an attempt in. And the second thing is you open yourself up for criticism, if that makes sense.
And
not
that's
that we
brave.
want, and that's even that's brave, but it's also awesome. And we love to see that because obviously you want to make money in the desire, and you've taken stuff on the book. That's fantastic. Right now, the stock does look a lot better. So how about we talk about the stock for 2 seconds?
Yeah, that's a good idea.
And giving the answer on that one.
So looking at it, it is coming up, and there looks like a short-term opportunity in there,
but not a trend line one.
No, not a trend line one. And it's this. If you did the Trading Mentor course, you'd have some rules that would help you with this one. But looking at this, it's a high risk stock, James Hardie. There's no doubt about it, and it's highly linked to what's happening in the US market when you look at the charts. So there's a significant level of resistance here for it to get through at about that $23. That's what I'd be concerned about.
Thanks,
in the
mate.
short term.
Good question.
All right, next we have an email from Zane. Hi Dale and Janine, as more and more businesses start to reopen, more and more jobs will become available. With so many people out of work at the moment, I believe companies will seek will see an influx of people using their site. I've been looking at them for a while, and now I think now might be a good time to pull the trigger. Love to hear your thoughts, Zane. And Zane, thank you very much for that email. Interesting, he said pull the trigger.
Yeah, he did. I mean, maybe, I don't know. I'm not even going to cast aspersions on that one. I'll just throw that one out to the keeper. It's gone back to the nets. Okay. But SEEK. Look, a lot of people have been using SEEK anyway during the whole COVID-19 SEEK.
Yeah.
I don't think SEEK actually had a downturn. They might have had a downturn a little bit in new jobs being placed.
In earnings, you mean, or in terms of listings?
Well, no, the people losing jobs go to SEEK straight away to find a job. So from that point of view, but if you're unemployed, it doesn't cost you money. It's the advertisers, it's the businesses putting the ads up. So yes, they probably did have a bit of reduction in people putting ads out there, and there probably will be a bounce on that. But SEEK's a little bit bigger than that, I think, too. But let's have a look at the chart anyway and see what the chart actually says, because that'll actually tell us what's going on and what the big end of town are thinking.
Look, I'm hearing from some people there are jobs out there.
Yeah, there are.
I mean, we're looking for people.
We're looking for 4 now.
All right, so looking at SEEK, we can see there that really nice looking chart all the way up. Now, this is an interesting stock because when I looked at this in the past, I had thought that the overall pattern had finished at this high here in October 2018, because we study patterns in the diploma, but we also study these patterns in the advanced course that we run as well. And it actually defied that. So this is what was interesting about SEEK. It actually went to a new high, but then what's happened is astounding, this correction that it's had after. So that makes me think that there still could be some weakness down the track, even though short term we could see the stock move back up towards that $20 mark. But look, I'd be a bit cautious about holding something like this, even though the potential is there from a fundamental perspective for them to continue with earnings. Just the chart is not clear right now on it.
Yeah, but it is looking good. It's looking a lot better than what it was.
Definitely is.
But a lot of stocks are looking a lot better than what it was, and the market's not pushing ahead.
Yeah, so would I pick this stock? From my point of view, no, I wouldn't.
Okay, cool. Yeah. All right. But that's
just my opinion. Yeah. All right, now, next one. Okay, I think we better get into the chat, actually, and have a look at the stocks we've got on our list there. So you wanted to do SCG first, didn't you?
Yeah, what we did was we went, instead of, because we had people posting really, really early, so we've actually gone to the last one at... as we got in here, and we had one from CJ who wanted is SOG?
SCG?
SCG.
Yeah, SCG, S Centre Group. It's one of the big real estate type stocks. So we're looking here at a stock that's fallen. Now let's just get a bit of a gauge on what's happening. Now I've got no tools saved up there, so I'm going to have to go up.
What are you doing? There's tools up there.
Where have you got them? Oh, you've got them up there. It's very hard for me to see.
We've got a different laptop, guys.
The lights.
Last week our laptop died, but the IT guy said it hadn't died. It worked perfectly for him, so go figure. So what are you looking for?
I'm looking for the PRP tool. Can you see that there?
Yeah, so if you go, there you
it's
go.
It's fun when you have your boss telling you what to do. All right.
Would you like me to drive it for you? I'll give you a license. I've got a Wheaties packet over here to give you a license to drive the software that you've been using for 20 years.
That's embarrassing. All right, it's a new computer too. Looking at this, 42.7% down. What's the colour shade of red needs to be saying right now?
Purple.
Okay, so we're looking at 43% down currently from where it actually fell. So when you compare this sector and some of the stocks in this sector to other stocks on the market, you'll see that it actually was hit harder. And I can remember what happened in the GFC with some of the real estate stocks, how much they fell compared to just the broader market. It was really quite huge. So I would say that in times where everybody's concerned about financial systems and whether people are able to fund loans and whether there are going to be more loans, and also it's also commercial property. People are concerned about
retail
that.
Shopping centres.
Yeah, I mean that's when the proverbial, I can't say that word because then I'll have to put money in the swear jar too, hits the fan. And so I just wouldn't be even interested in this stock for a long time, I'd say, even if it did go up in the short term.
No, I wouldn't be interested in it either. I don't see them going that far. I really don't. So next one is from I've got to say their name, it's NEC.
Okay.
The Everett Kids. Hi, Dale and Janine. Could you have a look at NEC tonight? I've just bought it $1.38. Was looking for analysis. So look at that. He's just bought in the last week or two.
Okay, now what's fascinating about this share is it actually traded to a new low. Now I'm going to go easy on them because they're kids.
How do you know they're kids? They just might be using that as a decoy.
Well, look,
so you
I'm
take
going to be
it easy
nice
on
anyway.
them. Okay.
Okay, so we've actually seen NEC take out this October 2016 low, which means whenever a stock takes out and makes a new low, it can always go lower. That's just a general thing that we say. It doesn't mean that it will, because it's actually unfolded in a really nice pattern on the way down, which you'll learn if you do our course. Nudge, nudge, wink, wink. I'm not very subtle at times, I know.
And nudging and winking it.
Yeah. Looking at the way that the stock's unfolded on the rise, I can see why they might have purchased it because it has moved up incredibly well. It looks like a short-term opportunity, but you can see there the last couple of weeks the closes have stayed roughly around the same, so it is struggling a little bit to get on. It may even come back in the short term before it starts to move up. And I'm just going to have a quick look at what we can see there.
Just have an exit strategy, I think, is probably the easiest thing.
Yeah, look, I think that's the thing, isn't it? Because in the short term, it could come down to $1.20. On the upside, we could see it head to about $1.70 in the short term. So it's just about managing the risk and making sure you've got a stop loss in place. It's really important.
Okay, so let's fit one more stock in before we go to our main topic. This one is NCK for Tom. Tom saying, hello, Dale and Janine, can you please have a look at NCK, please? I've currently invested in it and would love your input. Thanks, Tom.
Thanks, Tom. Look, great. Look, Nick Scarley, it's a furniture. So we're talking about the retail space, aren't we? And look, retail has been, hit hard. We can just have a look.
It's quite well though, hasn't it? I mean, obviously it fell from over $8 to under $3. So.
Yeah, well, let's just see how far we're talking about. So it's nearly 70% decline and it's recovered about half. So that is a good sign. Maybe it means that there's a lot more people. Actually, my other chart's not there, so I'll go weekly on this one. It means that a lot more people may have come out. And look, there was a nice little entry there, potential for it to go to about 640, 660 in the short term. But, you'd want to be setting a stop loss for something like this because look how volatile it can be, even in a normal market. So that's Nick Scarley there. Interesting. All right. Now it's time we get into the topic for tonight's show, which is day trading and predicting short-term market direction. Good strategy or not?
Now, last week, ASIC released a report titled Retail Investor Trading During COVID-19 Volatility. And I must say, whilst the findings of the report were really not that surprising to me, they are a very clear window into why the majority struggle for consistency in the stock market. Now, you can download the report for free, or the ASIC report for free, from the ASIC website. Just go to asic.gov.au, and I strongly suggest you do so. We will get into some of the details of the report and give you our opinion shortly on the report, but the main thrust of the report is that there has been a spike in the number of beginners attempting to day trade, and that's why we thought we'd bring it up for you today.
Yeah, that was a good idea on your part, and I think the thing is, if we're summarising the report, I guess for a lot of people, they don't want to go looking at it. It's easier for them to just get it from us, but if you want to read more detail, and some people do, it's interesting. So we understand the perceived attraction that day trading short term for cash flow has with people. After all, most traders dream of making a living from the stock market, but exactly what are they experiencing as they attempt to day trade? Now, as Dale and I have said many times before, trading short term can be inherently risky for those who lack a proper education, which is why individuals who are new to trading start and fail very quickly, and this is especially so in highly leveraged markets such as with CFDs and with Forex as well. So in fact, according to ASIC's report, a significant number of retail investors were getting it wrong during the COVID-19 correction in March. So let's have a look at a summary of some of the things highlighted in the report, shall we?
Yeah, I'll just bring that up. So we're just going to bring up the PowerPoint report. Oh,
okay.
Geez. Brand new computer, and let's just get rid. Oh, what did I just do then?
Yep, beautiful.
I accept. Close. Okay, so let's just bring that up and have a good look at the report. So basically what the report's showing us is, as I said, it's called, so they can't see it. Okay, what do we do?
All right, so look,
I'll just go down to this.
Can
you see it now, guys?
Can you see it? Basically what it says, it's titled Retail Investor Trading During COVID-19 Volatility.
Okay, now what I wanted to do is show you the period that it covered. So this is an All Ordinaries Index chart, and this is a daily chart that you can see on your screen here. So the report covered the period from the 24th of February to the 3rd of April, so roughly about 4 to 5 weeks. Now they picked the day after, or pretty much the first Monday after the peak. So that's the 24th of February, and obviously it ended up on the Friday, the 3rd of April, and you can see here, that was the big meltdown. So the market, if you remember back only a few short weeks ago, the panic that was happening, the bad news that was happening, the media reports that were happening, nobody knew what was going on about what was happening here, but the market was melting down. It went down over 38% or something at one stage, down to the 23rd of March. And you can see here, there are all the dates it fell. So there's 29 trading days between that bar at the 24th of February and the 3rd of April. And the market fell just under 28% between the close of that day, the 24th of April, and the close on the 3rd of April. So you can see the volatile period that this report covers. Now, the important points on the report was that average daily turnover by retail brokers increased from 1.6 billion to 3.3 billion, so doubled in that period of time. Trading of new and dormant accounts. Now, new account openings were 3.4 times higher than they normally are, or against a reference period. Now, dormant accounts that were not traded for 6 months recommenced to become 21.63% of all active accounts.
Wow.
What that's saying is there's people jumping in and opening new accounts was 3.4 times higher than normal.
Yeah.
And those who hadn't touched their account for 6 months or more accounted for 21% of the activity in that month. So they reactivated their accounts and started buying and selling and doing that in that period of time. In the worst time that I've ever seen. Like, as I said, Janine and I don't, like, markets don't crash at the top, but the amount of volatility and unpredictability of the market at the time was massive, and this is what people were doing. Important points keep going on. So retail investors are trading more frequently. So the average time between trades declined substantially from an average of 4.5 days to 1 day. So they're buying in and getting out of it again. Now, daily turnover in exchange traded products such as exchange traded funds increased by 159%. So people were doing more. And there's a lot more exchange traded products than just ETFs too. Just to move on a little bit further, there's a couple more things. Changes in order characteristics. As soon as I read this, Janine, it scared the absolute bejeebers out of me, because it was an increase in retail trading or retail traders or investors using good till cancelled order types, and that approximately doubled than what it normally is. Now, for those of you who don't understand what a good till cancelled order type means, if you place an order to buy a stock, let's say at $1, you buy it at $1, or you decide to want to buy it at $1, but it's trading at, let's say, $1.02, and you think, I'll just put it underneath, and if it gets to $1, I'll buy it. If that goes up to $1.20 over the next couple of weeks, you're not getting taken up, because you're saying that order's there till it's cancelled. But if that stock then starts falling away 2 weeks later and then goes through $1, as soon as it hits $1, you get taken up and you buy that stock. And you may not even be watching the market at the time, and then a month later, you check your broking account and you've bought it and the stock's at 70 cents. But you go, why did I buy it? And trust me, people do that.
But in the moment, at the time, when they got filled, they would have been happy.
They would have been
because
happy.
they didn't have to buy it at that $1.20. They were able to get it at the cheaper price. Yeah.
Never, ever
So-called cheaper.
do that. Never do that. I always, when we're placing my trades, it's always good for the day. Always, and then reset it the next day, and then reset it the next day if you're still looking to trade the stock. But never do good till cancel, because you will get caught at one stage. Because things happen, you place it on, and it's the default that the brokers have, most of the brokers have. But you might be in a hurry and you place your trade, you forget about it. It's good till cancel, so you haven't checked it, and then you go away and you forget about it and think, oh, well, I didn't do what I expected, I'm not in the trade. But you will get caught one day, and believe me, people do get caught, and it costs them a lot of money. So that stressed me out when I saw that. The next one I wanted to show you, or the last slide I wanted to show you here, is the last couple of things, is poor market timing. This is another thing with ASIC was saying, is retail investors were not proficient at predicting market movements over the focus period. Now, trading in one geared exchange product, now there's statistics all around that, I just don't want to cover them because we take up too long. But trading in one geared exchange trading product or traded product increased 16 times. Gearing means you increase your possibility of making profits, but also the benefits of making losses. So, and that increased 16 times. So people were leveraging, and that's scary in that kind of market as well. There were large spikes in the trading of CFDs, and in 1 week losses were net $234 million in CFD trading. So all of that's really, really scary to me in terms of showing what Janine and I actually talk about in terms of what people do on the market. Why wasn't it surprising to me? I mean, I'm sure they're not surprising to you, those statistics.
Because firstly, I was a little surprised at how big the numbers were. I wasn't surprised that it increased, but I was surprised at the size of the reaction from the masses. But I was thinking, that's just pure greed.
Well, it is, and
also is it chasing losses that they've made?
Well, that's part of it. It's when on my interview with Jim Beach on Monday, which went out today actually, he said, well, why do people think that if they lose their job, they could automatically start making money by being a day trader? And I thought, well, that's a pretty good point, is how do you expect...
Does someone just wake up and say, oh, I'll just trade the market?
Yeah, but the market's more safer in the last couple of weeks than what it was during those 4 or 5 weeks.
Yeah.
So we're talking about one of the worst market conditions I've ever seen and you've ever seen, and we've gone back on our markets 100 plus years.
Yeah.
So we've never seen a more dangerous market. The professionals, we were out of it, we weren't playing. But people new to the market, inexperienced in the market, were trading it. So let's move on, and we're going to have a look. We're going to have a talk a bit about a few other things. So what we're saying to you at the moment is the market, whilst it's looking a little bit better, it's still quite dangerous. So we want to answer a couple of questions for you tonight, and one really is, how do you ensure you're trading with the odds in your favour? Because it's really clear from the ASIC report that people weren't doing that. Really, really clear, and that's something we always say to people.
Day trading for a start, you're not trading with the odds in your favour. I mean, how predictable is the market in those sort of conditions from one day to the next?
Well, it's not.
It's not.
No, and it's about, it's the heightened emotions is the heightened volatility, and the market is running on more news rather than solid fundamentals and facts. And so you're getting a lot of erratic behaviour, you're getting false triggers, you're getting a whole range of stuff when the market does those sorts of things. So that's one of the questions we ask. So how do people ensure that they're trading with the odds in their favour? So what do they need to do?
Well, first of all, they need to have rules, and they need to understand market direction for a start. So if the market's falling, you're not going to bet against it, are you?
No.
And I think that there have been a lot of traders recently who have started trading after the low, so they've started looking for some short-term opportunities to get in after the low and make some money. And some of them I've spoken to have used our rules in the Trading Mentor course and have been trying to use the trend lines, but the trend lines obviously can't apply to, don't think there are any stocks at the moment that you can apply trend lines to, not in the biggest space anyway. But, that seems to be working for people at the moment. But the problem is that those short-term rules that they're putting into play right now will only work for a certain time, because the market conditions change. So short-term rules are actually far more changeable in terms of their effectiveness than it is for the medium term over time. So, I've spoken to people who have actually had a 50 to 60% win rate on their really short-term strategy. But, for someone who's just started now, maybe they started after the recent low and they're thinking that they're indestructible because they've made some money. But what are they going to do down the track, 2-3 months down the track?
Yeah, and that's the thing. Ignorance is expensive. So, and as the ASIC report says, a lot of people are losing money, and there's a lot more into that ASIC report than we've even brought up.
Well, it won't actually come out, right? Because people will be sitting on some trades, and that's what they're saying at the moment, that people will be sitting on those trades, those short-term trades. If they didn't make their money intraday, then they're just hanging on to it.
Yeah, but what the ASIC report was saying was they're getting it wrong. They'd buy in and then they'd sell out. But and they'd sell out because they were making a loss. But if they'd hang on one more day, they would have made a profit.
Yeah,
they were getting everything back to front, and that's what the ASIC report was talking about.
But doesn't that just come down to the fact that they're ignoring direction completely?
They are, and that's the thing is. And what alarms me even more so is those are the statistics when the market was really bearish. What are they like in the last 3 weeks? So I can probably say there's a lot more people trying to get into that. The other question we wanted to quickly handle is what are the challenges in predicting the market short term?
Yeah, the challenges for us are there. To predict the market in the short term, it's much harder for us to do that than to predict it in the medium term. Longer term is a different scenario again. So for someone who has no idea, how are they going to know how to pick? They're just going to put their finger up in the wind and think, okay, looks like the US market went up last night. I'll go and buy into the market today because the US market went up.
Yeah.
It's not the right way to think at all.
No, it's not the right way to think. It really is. It's about you need to understand direction and strength of the marketplace first. And there are people out there that are posting on the YouTube and saying, hey, I'm up 20% the last 4 weeks. I'm up 30% in the last 5 weeks, blah, blah, blah. What are you saying?
But we've seen this all before because it happened in the GFC. So back in the GFC, we saw all of these people trading CFDs, trading short term, and even picking some of the big stocks and trying to pick them when they'd fall. But then the market would go up for a while, they wouldn't sell out, and then eventually the market fell away. Now, I'm not saying that in this case the market's going to do that, because there are 3 things that could happen over the coming months. The market could just track sideways and go up slightly, and that's at the moment the current probability. But the market could eventually turn and come back down again.
So what are you saying to these people?
So what I'm saying is this has happened every single market correction. So, you could be reading this ASIC report and think to yourself, holy moly, that's me. I was in there. I'm in those numbers. And think to yourself, do I want to be part of the masses? And we often talk about what the masses do, or do you want to do something different? You've got to think outside the box. So if you keep thinking the current way that you're thinking, even if you've made some money in the short term, eventually the market's going to teach you a lesson about it. That's all I'm saying, really.
Yeah. Cool. Well, let's move on anyway. Now it's time to get into some more emails, but before we do, remember to hit the subscribe button now. Janine and I aren't going to open our mouths till you hit that subscribe button now, because we know half of you watching this show and this video have not subscribed. Why not? Please do it right now. Hit the button.
This would be a first if he could stay silent for that amount of time. So nobody's going to hit the button now.
We're watching it. Unless it goes up 50, I'm not talking anymore. That's what I should say there. Also give us a big thumbs up too if you like the channel and like the show. But this video, so we got to know. So we don't have a video this week. Why not? We should have it. If you want to give us a question.
I thought you wanted to see yourselves. Come on.
We will do. We always will give preference to video ones. So whether it's on your webcam or whether it's on your phone, stick it in front of your face and ask us the question. We'll put you on every single week. So it's,
I guess that proves that these videos are legit. We're not recording them ourselves and putting a mask on.
Oh no, fine. But then the quick question. Can I ask the next question, please? Can I do that?
Yes.
Okay, thank you. Hi, it's one from Craig. He says, hi, Dale and Janine. Firstly, great show and always great content. I've dabbled in the stock market for the past 2 to 3 years and certainly learnt my lessons along the way, starting out with speculative penny stocks and paying the price, knowing the reason they are called penny stocks. Then stumbled across your YouTube content, which got me even more interested in the market. Now, since in the past 12 months I've read both of Dale's books and have since done the trading mentor course. Oh, fantastic, mate. And have learned a great deal from this entry-level content in those streams. Now, certainly looking at the craziness of the market currently, seeing the market rally even though we haven't seen the true impact of COVID on the economy and the loss of revenue to businesses in the current quarter. How true is the saying the market is factoring everything in and these rises are due to the future forecasts of these business and revenues into 2021? Lastly, if you can share your thoughts on Cochlear after their initial raising. We know the sales and revenues will be massively down this quarter and financial year, but now with operations getting the green light, the expectations would be for sales to pick up where they left off.
You'd have to be
question.
positive about that one, wouldn't you? About
Yeah,
the
it's a good question. But it's nice. I mean,
story.
he was obviously, he's got caught in penny dreadful, so he was some of the people that would have been on that ASIC report.
Right, okay.
Now he's learnt his lessons to do that, so that's the sort of stuff. But let's go and have a look at Cochlear.
All right, shall we?
Because obviously, they're opening up the operating theatres again for, those non-essential
But the
operations.
chart's not reflecting that at the moment.
No,
so
it's not.
he's talking about how much does the market or the stocks factor, how are they factoring in all of this? And because the financials haven't come out yet to tell us what's going to happen in the next quarter, true, but companies are actually saying that they're actually talking about forward forecasts and they can't truly predict what the impact is going to be. So, we've seen that come out from Cochlear in media announcements recently.
Well, we saw that in the US. In my US report last week, I was talking with Jim about a lot of the companies in the US, whilst they reported their first quarter earnings for calendar year, because they're calendar year, not financial year, okay, they're not giving any forecasts.
Yeah.
And analysts in the US are mixed feelings about
Well, it's
what's
smart
happening.
because they'll get caned if they're
They
wrong.
will, because there's no certainty, so they don't know what they're doing. So
looking at Cochlear at the moment, I'm still doubtful. Look, there's just been a capital raising, but look, it's held up pretty well through this whole process, which is a good thing for Cochlear. But if I saw this stock trade back below this low here in April, I'd be saying, look, it's more likely to head back down again.
Good, but nice question, thank you, and thanks for reading my book, Craig. Next question.
Next question is from Josh. G'day, Josh. He says, G'day, Dale. I've just ordered your book online. I'm currently wondering how you think STO Santos is tracking. I like a lot how you talk, and I'm looking forward to your book. He likes how you talk,
I think
so
he
you better
likes
not go quiet, though. Knowing me, I'll probably end up on your course in the next 12 months. You just stopped yourself then, didn't you? Thanks in advance. Warm regards, Joshua.
I'm scared of that swear jar, I really am.
Okay, so Santos.
Bring up Santos, okay.
All right, now looking at the monthly
more scared
chart
of the pink boxing gloves.
Looking at Santos, you can see there, I think I've talked about Santos not that long ago. Now, the challenge with the pattern that's unfolded on this stock is that you don't know whether this is the low here.
Another stock not to buy and hold.
And it's definitely a trading stock, as Dale was saying. Short-term trading, it may be okay, but it is volatile and a higher risk basket. So we could see that Santos trade up into this $5.60 to $6 mark in the short term, but any move on the downside would have to be viewed with caution, because if it does start to pull back and trade back below this April low, then we could see it come back to test the low in March 2020, which wouldn't be great given the way this unfolded. But on the upside, it could be that the overall pattern concluded in this low here, and we could be seeing the start of a new run. So look, at the moment, it's just a risky
and with
stock.
oil maybe finding a bottom, this may do a little
drive
bit
it
better.
higher.
Might drive a little bit higher, but thank you very much. The next question or the next email we've got is from Kim. Hi, Kim. Glad to have you on our show. Kim says, hi, Dale and Janine. Thanks for your show. I love it, and we love your question. I've ordered your book and waiting for it to arrive and looking forward to reading it. Can you let me know your thoughts on Sydney Airport, Bravura and MNF, please? So we're going to do Sydney Airport. We'll only do one stock because we already don't have enough time
Now,
to
Kim,
cover
I tried
everybody.
to get two in there for you, but he went back through the workbook because he knows what I'm like afterwards.
I know, she sneaks them all through. Okay,
So look,
go.
Sydney Airport there, look, interesting company indeed, and I think in the short term there could be some upside there, a bit of resistance hanging around that $6.20 mark, but once we start to see Sydney push higher, we could see it trade up to about somewhere between $7 and $7.60 in the short term. There's some heavy resistance at around the $7.60, $7.80 mark for Sydney, so I'd be a bit concerned about that, and also about debt levels and what's happening with the company. I'd just keep an eye on what's going on there with them. Look, in the short term, they may come back down to this low here in April 2020, so I'll just be watching for any move on the downside, which it's showing at the moment. So look, for this stock, this is not a company that I'm really excited about, and looking at it in the short term, I think that there's some risk on the downside. So
I think anything to do with airlines and airports are going to struggle for a little while, aren't they?
Yeah, just in the short to medium term, yep.
No, that's okay.
Now, I think we better get into some chat questions, shall we? So we can knock a few of those off
I got a question
tonight.
from Ashman, who says, hi guys, I'm currently reading Share Investing for Dummies. I think that's the James Dunn book.
Is it?
I'm pretty sure. Do you remember James?
Oh, look, it's been a long time.
James used to write for the Fin Review and a Melbourne guy.
Yeah,
a lovely bloke. Good book for beginners from that point of view. He said, I'll read your book after that. Looking at share prices rise 10 to 15% in just one day is urging me to buy blue chip shares now. What's your thoughts?
Okay. That wouldn't be a reason for me to buy.
Sounds like a FOMO to me.
Okay, do you want to expand on that for new people?
Oh, fear of missing out. So you're not missing out. So it's about education first and then buying. And the market's going to be here the whole time. So you could be, what happens most, there's an old saying that the professionals buy at the bottom and the amateurs buy at the top. And the amateurs sell at the bottom and the investors sell at the top, or the smart people sell at the top. So you may be trying to buy in some of these stocks as they're about to fall over. Now, I'm not saying they are, but right now we're not super bullish on the market. We're not super bearish, but it's not pushing through.
But it's about having rules.
To worry, but it's
so
as
rules. Some stocks are starting to set up and present rules, as long as they're big liquid stocks, I would actually be looking at those rather than looking at the other end of the market and seeing if we can, generate some gains there, because that's where the money's going to be. Because most of the market will, even though that there's some speculation out there on the smaller end, and they've been talking about that, when the market gets going, that's where a lot of the money's going to head to. So
to me, the best thing you can do, Ash, is to finish James's
Good question,
book.
though. And I like the fact that he's thinking about the top end.
Yeah, but he should finish reading James's book, then read mine, and then get into the market from there. There's always plenty of time to make money. Don't need to rush into it. But anyway, let's get on to the next one. It's a question. It's a stock called PAR from Matt.
Yep.
And he says, "Hey Dale and Janine, loving the content Wealth Within provides and can't wait to learn more. And I just purchased your book. Fantastic. That being said, I'm wondering about your thoughts on PAR, an entry point. We're not going to give you an entry point. That's not what we do, but we'll have a talk about what we think of the stock."
Now, Paradigm Biopharmaceuticals, see that was a big mouthful, that one.
It is.
Very volatile stock, clearly looking at the chart. Now, just to give you an indication of what I mean by volatility, let's take the bar at the high. A 36% move in 1 month there, but even before the COVID-19 happened, there was an 80% increase in 1 month. So this is what attracts people to these sort of stocks. But have a look. I mean, if you bought the stock back here and you thought you were an absolute legend because it had gone up, over 100%, let's say.
You're taking it easy on him, aren't you?
It's traded. No, I'm not. I'm not talking about him. I'm just saying, just traders. I don't know when he's bought it, but I'm just saying, if the stock had come back to around the same levels, he would have made nothing.
Well, he hasn't bought it. He's looking at it for an entry point.
Well, right now, to me, it's gone. If there was an entry there, which I'm just saying that the way that it's moved up, it's already given the entry point.
Yeah, I think, and the current week's bar looks a little bit bearish, so you'd wanted to keep it going, but right now I'm not really that excited about it. Looking at Macquarie, I know we've talked about it. Interesting, last week we've talked about Macquarie and CBA are two preferred banks, although no, we're not super bullish on financials. And the first questions we get are, can you tell me what your thoughts are on Macquarie and CBA?
Yeah, well, look, Macquarie I like, so if we just bring
CBA.
up I'll look at both, yeah.
So this is from Matt, who says, "Hi Dale, can you tell me your thoughts on Macquarie Bank? Thanks, just bought your book halfway through it."
Yeah, so I just want to show for a point of comparison, if we're looking at Commonwealth Bank right now, I wouldn't be wanting to, there's no push behind it. So if the big money's not pushing it higher, why would you buy it? That's really the way you've got to start thinking. Because the old way of thinking is to try to buy things when they're low, yes, but people are thinking, it's cheap now because it was trading at over $80 not long ago. So they're thinking, I can get Commonwealth Bank now and I can buy them at 50 something and put them in the bottom drawer. But you've got no direction yet. So it's always about trading with the direction.
Are you going to get on a train going the opposite way the way you want to go?
No. I'm talking about Commonwealth Bank, so are you saying I'm on the wrong train?
Well, I'm just saying, if a stock's going down, that's the wrong way, isn't it? So why would you get on that?
That's
you
right.
always should be getting on something that's going the right way for you.
Well, that's essentially what I'm saying, but you've just said it in a more succinct way.
I just used a metaphor. Sometimes I use meta-5s. Anyway.
Okay. And looking at Macquarie here, we're seeing a much more bullish move in Macquarie. I mean, if there are a lot more takeovers and mergers and acquisitions, then Macquarie generally benefits. So it can often be more volatile when the markets move in both directions. So that's what we're looking at there. So in the short term, it may just track sideways for a little while. But looking at the upside, there's potential 130 to 135 on the stock. And it's just a wait and see thing. But like with any stock, you've always got to have some sort of a stop loss on it in case it goes the other way.
Okay, let's go and look at Bubs. It's from William. He was at 5:23 posting a question. Hi Dale and Janine, could I please get your thoughts on Bub? I entered into the position last week after it had broken a $1 resistance on rising volume. Thanks.
Yeah, I guess the challenge with Bubs is it just took off from the bottom, right? And it made it harder for people to get into it at a good price because of the way that it moved. But one of the positives is it's actually trading above $1, and that makes it appear on the radar of more institutions, I guess. So
just be careful.
Yeah, just be careful. That's what you're saying, because you could get played.
Well, it's gone up 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks now without any major pullback.
Yeah, and looking at it, it's quite hot. There's a lot of resistance overhead around this 120, 130 mark. So it could come back in the short term, trade within the range of last week. I'd want to see it settle down before I was looking to purchase a stock like this, and thinking too that it is high risk. It's really got to suit the person's strategy and their ability to accept risk. So it's not one for the faint-hearted.
Nah, I think you need to put an exit strategy on it too, or a stop loss, or definitely a stop loss on it, but have an exit strategy of what you're prepared in a downside move. It does go down, so as long as you do that, then you're going to protect your capital from there.
Okay.
We have a question from Mark, and Mark says, hi Dale and Janine, my question for you tonight, when considering buying stocks in a company, are the ASIC company announcements something you take into consideration?
We always look at what's happening in the media. So, for example, we're looking at what are the companies announcing. So, what's their recent announcement? What are their financials doing? And what's happening in the media. So, what is the opinion out there? But we don't actually allow that to sway our decision because it's just news. But we need to be informed as to what's happening with the company, because what could that turn into? And we like to have a discussion around the investment team generally chat about that and what it could mean. When we're purchasing stocks for clients, but it's not the overarching weight in terms of our decision making, because that's based on the technicals, which you see on the chart, and that is all about looking at where the money's going. All right, so that's really in a nutshell.
All right, I got a question, another one for you. This is from Suraj. He says,
do I have to type in a stock?
No.
Okay.
You just wait. Just hang on
a second. I like the ones where I'm typing in stocks.
I know, you just look. Suraj, 14 years old. Okay, so that should get you excited.
Yeah.
I'm currently self-taught with the help of my dad, and I'm interested in purchasing your book, Accelerate Your Wealth. How can I get my hands on the book? Just go to our website and you can order.
So the How to Beat the Managed Funds is still free, but there's
just
postage.
Pay shipping. Yep, so just pay shipping on that and get that.
So that you can get that one as a good place to start. And then if you decide that you want to continue reading more, which you'll get, if you're hooked in, believe me, and you really want to read more, and then you'll go on to Accelerate Your Wealth and read that one too.
You know what I'm excited about?
What's that?
He's going to be teaching his dad soon.
I'd say
he will. He'll be teaching his dad.
We've actually had people who have done Year 12 and they've done elective subjects to do our diploma. And by doing the elective subjects, they're actually, I think one of the examples was, it was a young lady and her dad was trading and he made quite a few mistakes, and she was actually telling him how it should be done, which is just
she paid for her course in one trade with her dad by telling him not to exit.
Yeah.
And he made enough money on that one trade not exiting that she told him to, that paid for the whole course.
Yeah,
so he was really, really happy. So that's the thing. But good on you, mate.
It'd be good to get more young people who are going through
absolutely.
school
14 years old,
deciding
that's
to
fantastic.
do that as an elective. Yeah.
Really exciting. But thank you for posting your question. So very much thank. We've got another one from Raj who says, hi Dale and Janine, I finished your book on the weekend. I've learnt a lot. I'm looking forward to applying this to my trading. Can you please look at ALU? Which are on my watch list. He's also at Macquarie, and we've covered that already.
Look, Altium's been one that we've talked about on the show a few times.
There's a few people asking about that one too.
Yeah, and it's actually held up really well. So it stayed up around that $34, $36 mark. In the short term, I would say that, it may actually go a little bit higher. There's a fair bit of resistance there at around that $38 mark there, but it's actually tried to come back up. And this week, it's lost a bit of momentum. There is a bit of a gap down here on the daily chart. Could see it come back between 31, 32. And in the short term, it may move up and fill this gap here. So look, I would say at the moment it's still moving and it's closed up today. So far it looks okay. Yeah. I mean, if you're in a trade with it,
looks
and
okay,
there was
doesn't
an
it?
entry there, so if you're in a trade with it, then you'd still be holding it at the moment and have your trailing stop loss or initial stop loss in place.
Okay, we're going to look at stock that I like to look at it quite every now and again.
Really? What's that one?
Jumbo Interactive. So Jin, Jin. Greg's asking, hi Dale and Janine, recently purchased Jin around $12. How do you see the trend of this stock?
Well, you can talk about it then. How's that?
It looks good at the moment. It's one of those, it's a very, very volatile stock, and you really do have to be onto it with your stop losses and making sure you're protecting capital, because as you can see, massive move all the way up through here, but it's come right back obviously in this whole move back into that March low. So really just be careful with it at the moment, but it is looking quite nice. Just keep a tight stop loss on it. I think it's probably got some more upside potential right now, but it's a nice little stock to trade. Again, not a buy and hold stock. It's not one of those I would do, but well done for bringing that one up. I do like it.
Okay.
But let's get on to another one. What's this? Alex, Mira and I have invested in both Woodside and Oil Search, and both are doing well. If the economy improves, we can see some nice gains. I'm sure we can talk a bit about which one do you want to do?
Let's choose Woodside.
Woodside,
it's a nice big stock. Okay, so Alex, good that you've come onto the show tonight. Good to see you there. Looking at Woodside, which is WPL is the code, we can see that there was actually a little entry there for Woodside in the short term. Still, again, you'd want to have a tight stop loss on Woodside with the volatility that we're seeing in this space. But look, so far it's holding up nicely. As long as it stays above that $19 mark, then it will be fine and could rise to somewhere between around $23 to $26 in the short term. So in the short, look, some of these oil stocks are actually, or the mining stocks are going sideways at the moment. So it could continue to do that temporarily, but you know, I don't mind Woodside for short term. Big picture though, it's still a bit higher risk because we can see that the overall trend, the long-term trend is down. So that really this is the earliest potential time to be able to get into a stock. So you could say it's probably a bit higher risk than other stocks being in the mining space and also being in that long-term decline.
I agree, and I think with oil, the jury's still a little bit out with oil, isn't it, really?
Yeah, so look, it's just waiting to see whether that starts to make the next move.
Interesting question I've got now for you. I surfed the web and found the best question, so I've been told this is my last question. Why is this my last question? Hi Dale and Janine, it's from Matthew. He says, hi Dale and Janine, when interpreting trading volumes of shares, does a high trade volume reflect a volatile stock or a popular stock that is worth looking at further?
Do you want to answer that or do you want me to?
Oh, I can answer that.
Okay.
High volume doesn't necessarily, it's high volume on its own doesn't tell us much. It's what's the share price as well. Because sometimes if you've got a 1 cent share, not a lot of money makes it a lot of volume, if you know what I mean. But if it's a $100 share, a lot of volume makes that a whole lot different. So it's about combining the volume and the price to determine whether it's volatile and whether it's something people are taking interest in. So volume alone doesn't tell you too much at all. And I think of the most overused tools in the marketplace by people wanting to trade is volume. I don't know about what your thoughts are on that.
Look, you and I both know
You keep
that...
smiling at me, so you must have something good to say.
I'm sitting there trying to point him to look at this camera. I'm not the director, so I shouldn't be doing it. It's not my role.
He's in my ear, so I don't need
It's
two
my
people.
controlling side coming
It's
up.
a camera GPS. Answer the question.
Oh, okay. Are we answering the question? I thought you were doing really
No,
well.
but your turn. Keep answering the question.
No, I think you should finish.
The camera's on you now.
No, really?
No, but I'm just saying volume is something that, the least thing. I mean, I find people watch the market and they look at volume, and when something's moving in price, let's say it moves 10% and the volume increases, they jump in and buy it.
Right.
And I just think that's a really poor strategy. It really is a poor strategy.
Just working on a percentage.
Just
really?
work, yeah, and increasing volumes, and so it's a really basic strategy. And volume really is.
It's a good short-term supporting indicator, I guess you'd say, that the money's pushing the stock up. So if you've got proper rules and the rules trigger and the volume's actually supporting that decision, then that's great because you've got the weight of evidence behind you. But if you're just looking for percentages with volume rising, volume's all over the place often for stocks. So the real challenge for people who have no idea about how to treat the volume is that what sort of volume signal have we got to look for? Is it something that's, is it a really 1 day move, 1 week move? I mean,
the thing is people read about it in books and they see it on these crappy YouTube videos of these experts in baseball caps and stuff like that. Yeah. These guys that are real people you should be listening to on, the University of
Can
Google.
we just please settle?
Well, you know what I mean, but
I know what you mean.
volume is next to useless to a trader.
Look, we know that, but that's short-term stuff, isn't it? Like you're saying, it's not
saying
the right
anything
way to go out
about this gentleman. Like I'm just saying is,
Yeah.
but it's overused and it is next to useless as a trader. You know, and
I
especially
guess
on a
it's one of
daily
the
chart.
easiest things to see, though, isn't it?
Correct.
So that's why they use
But
it.
it's misleading, and and same with the depth of the market too. A lot of people use that. They go and look at the depths of the market, and that's like watching a fictional movie all the time. And people go, "Oh, this has got so many shares to buy, and this is so many to sell, and there's so many buyers and so many sellers." And you and me look at that and just laugh.
It just goes all over the place during the day.
We just laugh as professional traders. But great question. Thank you for asking the question. I really think it was a brilliant question, actually. And sadly, it is our last question for tonight. So I am really, really sorry. Hopefully you guys have found flix.net, flixx.net. As I said, there's different videos we're putting up there, and we're putting up more as we're going on. But it is the end of the show.
Yep. So if you'd like to have a topic for us to discuss it on the show, then send your ideas in and we'll have a look at your requests for our upcoming shows. Remember to put in your videos, send in your videos. We want to see your face so that we can, not laugh. We would never do that.
No, you'd laugh.
Oh, look, I'm really interested to see what people look like. It's really nice because it's when there are, we see the names on the chat forum and the same people come in, but we can't see your faces and you can see ours. So that would be fantastic if you could.
So if you have a topic for us, then please put it through. But if you'd like to see the show continue to grow, remember to share it on your social media with your friends and colleagues. I know some of you are doing that, so thanks very much for that. Also remember to make sure that you put the show in your calendars. We'll be back here live on YouTube every Tuesday, 7 to 8 p.m.
And as always, we're happy to receive your questions, so send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line.
Well, that does bring us to the end of the show, and again, we hope everyone enjoyed it as much as we have bringing it to you. And as always, thanks for joining us, and we hope to see you again next week. Hit the subscribe button now. Goodbye, good luck, and good trading.
Bye,
Take
everyone.
Care.